Hello, hello. Fantastic. Thank you very much, everyone, for choosing to spend your afternoon with me. My name is Ryan from DSG. This afternoon, I'm hoping the talk has two purposes. The first one is to give a kind of beginner's guide to tokenization, but then also a look at where things are now and where they can be going in the future. Today we're not going to get down into the really nitty-gritty details, but if anyone does have particular questions on actually what tokenization looks like for a particular project, please come and say hi to me at the Innovation Zone afterwards, and my email will pop up at the end as well, or connect on LinkedIn. Okay, so let's start with something nice and simple, so a nice definition. So at a purest sense, tokenization means taking something from the off-chain world, the real world, and representing it as a token. So that could be something physical, a building, a piece of art. It could be something intangible, like intellectual property. It could be anything. And the devil is in the details of the legal structure behind that offering, and what that means in different areas for regulatory purposes and so on. But the tokenization, bringing it on chain in itself, doesn't often add value. It's what can be done once the token is on that blockchain. Does it make tracking ownership and share registry easier? Does it allow assets to be transferred across borders easier? So when we think about tokenization, sometimes it's tempting to get caught up in a hype of tokenizing it makes it better. It's always about how does it add value? How does it bring in new buyers or markets? Or how does it allow the tracking for tax or something like that? So always keep that in mind. And with any new technology, you can think about things in terms of the hype cycle, right? So the Gartner hype cycle. Like all things, tokenization has had its big hype cycle. Anyone want to have a guess, yelling out from the crowd, where they think the peak of tokenization hype was? What year? Any thoughts? Yep. Depending on who you ask, 2017, 18, it depends whereabouts you are in the world. But that was the hype of tokenization is going to change everything. And then what happens? The big kind of trough. And so figuring out, actually, there are some obstacles here because regulatory bodies don't know how to treat this. The technology isn't quite there yet. People can lose their tokens and things like that. And so, there was that disillusionment. I would say right now, we're probably at the beginning of this rise back up. And don't forget, it's visibility on the y-axis, so people are starting to be aware of it a bit more. But there is that kind of jaded sense from the last cycle of we've heard this all before. We've heard about tokenization. It didn't solve the problems. Well, hopefully today you'll learn why this time is a little bit different. So let's just set the stage. So don't think of tokenization as a buzzword. Just think about it as a paradigm shift of how ownership can be recorded and value can be transferred. The catch is, and this is the catch for people that have a finance background, tokenization doesn't magically fix liquidity. And when it comes to financial assets, usually people are trying to get more liquidity. So tokenization can be part of a bigger process, and I'll talk about how that can play out. But in itself, tokenizing doesn't magically bring liquidity. Now, all kinds of big numbers get thrown around of how big the tokenization market can be, and most of this is cannibalizing other financial structures that exist, and some of it is bringing in new offerings and new flavors to the market. So the real thing for us to think about, everyone in this room, everyone in the stadium, everyone in this industry, is how do we go from that potential to realizing it? And it's about the real world application, the integration with the finance machine that we live in and the regulatory machine. That's how things actually change over time. So here we've got a list of different things that are commonly tokenized today. And each of these is a topic in itself, right? When you think about real estate, well, there's different types of real estate. There's also different ways that real estate can be tokenized. You could, if you owned a building, you could say to people, I'm going to release this DeFi token, or I'm going to release this NFT collection, and trust me, one of these NFTs is 1,000th of that building. The problem is, and where the problems have been in the past with the last hype cycle, is that NFT doesn't actually provide any legal property rights to that building. And how does the investor know that that NFT is coupled legally to that property? What if the property owner just sells the property to someone else, right? So these are the types of challenges that need to be fixed before mainstream adoption. Our approach at DSG is to try and use as much existing legal structure and regulatory framework as possible. So usually in our world, that means an SPV holding that property, and then we're issuing digital shares native on the blockchain, but the shares legally give that investor property right over a portion of that company and therefore that property. So that's the way that at the moment is that next integration with traditional finance. Commodities are a great one. There's lots of tokenized gold offerings, precious metals, even things like graphite and other interesting soft commodities as well. Private equity and venture capital is a big one because, of course, these are assets and products that don't often have much liquidity, right? So there's the potential and early signs in the industry of having a VC or PE type of product that can be then a secondary market for it. Again, the devil's in the details of what that looks like, but that's where the potential is. Art and collectibles, you know, a piece of fine art or some other type of collectible. Again, the catch is how do you couple the token to the physical product? Because most people in this room have a cursory knowledge of blockchain and crypto and the benefits of that and decentralization and permissionless transfer. Well, that doesn't really necessarily interface with I own that physical thing over there, right? So they're bringing the rails and the potential of crypto and blockchain into the reality of a world where you need to have recourse if something goes wrong, legal recourse. That's where the space is finding its feet and the solutions are emerging. One of the really exciting things for me is the integration of on-chain assets, so tokenized securities and other financial products, and being able to plug them into DeFi protocols. That's something that is really, really interesting. It depends on the environment and the location. The challenge for institutions and regulators is that with DeFi, you can't be sure of the AML KYC of the other party. So the AML risk is one of the big barriers to institutions with DeFi. Now there's a way around that because there are institutional-only DeFi applications, and there's a way of de-risking, looking at through the blockchain, you know, the de-risking the fact that a cryptocurrency was linked to a bad event or a sanctioned entity. But these are the types of nuances that are emerging. And you know what really helps? When you have the likes of BlackRock and other big institutions getting involved, because it gives legitimacy and it validates that this is something serious that everyone should be looking and following. And that's part of this growing institutional interest. That's a really big tailwind for tokenization, because tokenization is no longer, just like crypto, is no longer a fringe group of radical people with magic internet money. This is something that is embedding more and more in traditional finance, whether it's Bitcoin and Ethereum ETFs, whether it's BlackRock doing on-chain treasury bonds. The regulatory focus then follows that. And so you've got countries like Singapore and Hong Kong, very, very advanced of the likes of Australia and New Zealand where I live. So they're kind of 7 years ahead of thinking about right-sizing their regulation to get ready for tokenization and what that means. So in New Zealand, we're the first blockchain-powered platform for issuing, tracking, and transacting in digital securities. And that was a long journey. That was working with regulators for 12 plus months to help them understand the space and understand, how our platform was de-risked, how our tokens, they can't be lost. We can remotely freeze them, we can remotely transfer them, we can enforce AML, KYC on chain. These are all the checks and balances that traditional finance needs for good reason. Regulation, people like to give it a bad reputation, but it is designed to protect investors and the public, and without it, scams would be a lot worse. So it's about speaking their language, checks and balances, showing them, building that trust, and that's something that we've done, and it's paid off in the long run, but it's been hard. It's been really hard. So let's get to the juicy stuff. So let's look at some predictions for the next 5 years, because it feels that we're on a bit of an inflection point with tokenization. So the fact that we're getting more regulatory clarity, not only from the leaders, the Singapores, the Hong Kongs, but you've got other jurisdictions, even, Australia and New Zealand are catching up, UK catching up, US now with the most pro-crypto, pro-blockchain Senate that has ever existed. These are all tailwinds. This is the clarity that big players need before they start to really dive into the space. They need to have that regulatory clarity, and they are getting that. The institutional buy-in is massive, because when you have the likes of the BlackRock and the big wealth managers, that trickles down through the distribution machine to the financial advisors, through to the end investors. Technological advancements. One of the reasons why the previous cycle of tokenization didn't really take off is that you could lose your seed phrase and then lose those tokens forever. Well, you can't have human error, meaning that you lose your shares to a company, right? That's never going to work. And so now we have the technology using the Ethereum token standard, ERC-3643, to be able to purely use the blockchain as a database infrastructure. So we can remotely burn, we can remotely freeze, we can remotely transfer. The blockchain, the token, is just the tool to solve problems rather than a speculative asset in itself. And my example here, I like to use the analogy is music, right? So the transition from analog to digital in music was the vinyl into a compact disc, right? And I mean, a compact disc, yeah, you can fit a few more songs on. The audio is arguably a little bit worse, right? But you needed to get from the analog to digital in the kind of ugly version, the compact disc, to be able to get to the iPod where you can put 1,000 songs in your pocket, and now Spotify where you pay $15 a month and you've got millions of songs. The Spotify, iPod stuff is the really cool, exciting things, but you've got to get through that compact disc stage to get things into the digital realm so you can innovate on top of that. So issuing the equity in a company on-chain, yep, there's some efficiencies there, It's not that sexy. It doesn't magically fix everything, but allows then using smart contracts to start to automate processes, automate tax reporting, being able to build different layers of innovation on top of that, whether it's collateralized loans, whether it's on-chain insurance, things like this. And tokenization isn't an echo chamber. It is in a macro picture of what's going on. And globalization of investment, breaking down cross-border silos of capital is happening more and more because it needs to. We are moving into a geopolitical space where it's not bipolar, it's multipolar, and that means capital needs to move around in more efficient ways, and blockchain is the ideal rails for that to happen. Democratization of finance. Most of us here are privileged to be in a country where we can access traditional finance services and investment products relatively easy for most of us. Lots of places in the world, they don't have that infrastructure. And so you've got places in Southeast Asia and Africa that are just jumping straight from zero to, DeFi and mobile technology. And this is where the uptake of tokenization in these markets can be really, really strong, and in some ways even faster than places like Australia. And of course, integrating with traditional finance is critical for tokenization to be taken seriously and to get proper scale. It needs to not seem to compete with traditional finance, but add value to traditional finance. And we live in an environment where ESG reporting and exposure and investing is more and more part of a portfolio, and using on-chain tools, especially when it comes to tracking the provenance of a project, of a supply chain of a product, of a carbon credit. Blockchain is the ideal medium for that. All right, so a few challenges, because there's always challenges. User education and trust. So the fact that everyone is here today at this conference, at this talk, means there is still a hunger to understand what this means. And this is going to take time. And, for consumers to want to invest in something, they need to understand it, or they should understand it. So education is a big part of what we do at DSG. We publish a magazine, we do webinars, and really try and showcase exciting things happening in the space. We don't have a scarcity mindset. We want the space to grow for everyone. And there's plenty of room for lots of players in the ecosystem. It's not a scarcity mindset. Regulatory fragmentation. So you've still got differences, even with New Zealand and Australia. You've still got some pretty big differences in how what tokenization means, what licenses are needed, what the tax treatment of that is. And so there needs to, in order for the cross-border flow to be more efficient, there will be more alignment over time. It will need to happen. Technology bottlenecks, usability is one of them. Yeah. So it's got to be simple. It's got to be easy. In DSG, we believe that you shouldn't actually be able to tell it's on the blockchain. So you sign up, you log in with your email, your password. The digital wallet is in the background. We sponsor the Polygon gas fees in the background, because as soon as you have the need to set up a wallet, save your seed phrase, buy some gas, you're losing people, right? Now, when it comes to liquidity, for those that don't have the finance background, is, let's say there's particular shares in a company or a fund, units in a fund. For it to be maximum success, people need to be able to buy and sell that when they want to. People don't like to buy things where they don't know if they'll be able to sell it at a fair price, right? And so one of the traps that people have fell into with tokenization is, I'll tokenize my product, in this corner of the world, and magically lots of people want to buy and sell it. That logic doesn't work. But with building cross-border partnerships, which is what DSG has done, with channel partnerships in Singapore, soon Hong Kong and other jurisdictions, we can work with them to actually share liquidity and use blockchain as rails for that. It's the only way it could possibly work, right? So the two barriers to cross-border investment at the moment, overly simplified, the two barriers are regulation and just technology. So we still need to do the regulation piece, but at least from a technology point of view, a Aussie, New Zealand, or Singapore investor, the user experience, the technology-enabled capability is the same for everyone, and that's really important. What's really exciting for me personally, growing up in an emerging market in Africa, is the ability for this technology to help new companies, emerging countries, that are trying to build their economies. So if you take a country like Timor-Leste, independence 2002, Asia, maybe the world's youngest country, they are not allowed into the ASEAN group because their economic infrastructure isn't enough. Do you think they can go from that to having a national stock exchange quickly? No. But could they have an exchange light version? Could they have a digital securities exchange with maybe some state-owned enterprise and some private enterprise to help capital come in from overseas? Yeah, that would be pretty feasible. Do you think investors would be interested in getting exposure to a fast-growing young country? Yeah, I think the demand would be there, right? You take a country like Cambodia, it barely even dipped in COVID. It's just because of the rising middle class and all of this type of thing. So there is value to providing exposure to emerging markets. And I'm quite passionate that DSG type of platforms will be a really key part in helping these emerging countries be able to crack into that global financial ecosystem. And my personal kind of vision is that, in the next, let's say, 5 years or so, the everyday investor will have more and more tokenized products in their portfolio. Now, the catch is it won't be called tokenized. They'll just be offerings. Okay? Right now, we don't talk about cloud computing as a feature. It's in the background solving problems, and we just talk about what problem it's solving. So in an ideal world, in 5 years' time, we won't be talking about tokenization. That won't be the feature that we try and sell. It's just the means, it's the background technology to solve problems. And I won't go into them too much because we're getting low on time, but a couple of the really interesting case studies is in New Zealand, there's special legislation around racehorses for digital syndication, and it's an industry that is definitely getting a little bit grey in its audience, and so there's a lot of drive to try and engage a younger market. With digitizing racehorse syndication on-chain is something that DSG is doing, and it's a really exciting use case to get a whole new market interested and engaged in an industry that's on the decline. Tokenized whiskey as well, helping small distilleries be able to reach a new audience and build a community. Traditional finance can learn a lot from Web3 when it comes to community building and community engagement. And so tokenized whiskey, yes, it's a great way to improve cash flow of a distillery. It's also a really good way to build an audience and a community around their products. So our core focus for the next 5 years is bringing lots of diverse offerings on-chain, because being able to provide something interesting and novel is the best way to get an audience and adoption. And so if you can make an existing product a little bit better, that's great. If you can bring an entirely new value proposition, that's even more exciting. It's got to be human proof, right? It's got to, human beings, we make mistakes. Even at the highest level, we get distracted. It needs to be human proof. So everything must be recoverable. There must be backups, redundancies, business continuity protocols. It's got to be battle tested for all outcomes. We're really focused on bringing a global investor network, expanding footprint into the US, UK, and so on, and adding layers of value. So being able to think about, what would it look like for a person to accumulate a portfolio of different diverse on-chain investments, and then using DeFi type of mechanics to be able to borrow collateralized loans against those, and using smart contracts to liquidate when required and all of that type of thing. So what I like to think about in my spare time, because I'm weird, is what an ad might look like in 2030, 5 years' time. Will it be allowing people to have sovereignty over their investment portfolio? Will it allow people to borrow against their portfolio instead of selling it? Because, newsflash, that's what billionaires do every single day. They don't sell their shares, they borrow against it. Because there's different tax implications, there's all kinds of different things. So being able to democratize that ability down to the everyday person that's trying to build their wealth is really, really exciting to me. So, a few things in closing. The takeaway is tokenization has, the narrative has peaked in the past. A lot of people have been building really, really hard. A lot of people are a lot smarter than me. And now it's coming back up and it's broken through into mainstream. When you have BlackRock releasing T-bills on-chain, that is mainstream. That's as mainstream as you can possibly get. And by 2030, I truly believe that it will change the way we think about ownership, investments, and the access to those. So it's really not about if tokenization will happen or if it will work. It is happening, it is working, but who will lead the way? Who will make missteps? Who will make the right partnerships? Those are the kinds of things that we think about a lot. So any further questions, please come and chat to me at the Innovation Zone, or email me or follow me on LinkedIn and have a conversation. And thank you again so much for coming out today. Really appreciate it.